All right, everyone, we might wait one more minute and then we'll get started.
Wait.
Okay, let's get started, everyone. Welcome, everyone. Thank you for joining us today for what is our second masterclass for Binance in Australia, our first with Crypto Collective. I'll be filling in for Jeff tonight as the host. For those of you who don't know me, I'm Damien. A little bit about me, I'm located in regional Victoria. I've been investing and trading in shares for over a decade. I've also been involved in some other investments like real estate, online stores, lead generation, and of course, crypto. I'm currently a volunteer for Binance as a Binance Angel, and tonight's masterclass I think is going to be an exciting one. Joining me tonight, we have Dario Angelo, our guest speaker for this evening's masterclass.
Hi, guys.
Hi, Angelo. For those of you that aren't, sorry, Dario. Sorry for those that aren't familiar with Dario. He's one of the founders of the Crypto Collective, which is an educational platform on Discord for people where people can learn technical analysis and how to trade crypto. The link to the Discord account will be in the chat. Today he'll be guiding us through the psychology of institutional orders and trading chart patterns and how to analyze them and make the most gains. Thank you for joining us tonight. Dario, tell us a bit about yourself.
Thanks, Dave. Thanks. Hi, everyone. Welcome to the Binance Masterclass. My name is Dario Angelo. I'm one of the founders of the Crypto Collective, and we're basically a Discord community, and we teach new traders the techniques and the methods that they can use to learn how to do technical analysis and to trade cryptocurrency as well as other markets. I've been using Binance since I started trading, so I'm really happy to be here today and present the masterclass to you guys and share my knowledge. But a little bit about my story with crypto. So back in 2016, I was actually traveling the world. I'm from Melbourne, and I was traveling around Europe, and I was doing a working visa in Amsterdam. I was working 2 jobs, and my visa ended up expiring, and I was looking for a way to extend my trip, but I couldn't work. And I got a call from a friend. He just invested in a cryptocurrency called Ant Shares at the time, and he made a couple $1,000s. My friend called me, and I took a gamble. I put my money into Bitcoin. I got really lucky. At that point in time, it was 6,000, and I ended up making a lot of money, and I extended my trip around Europe. And from that moment, I was absolutely hooked on trading crypto. So I started doing it basically full time. And the bear market came not long after that, and I quickly realized that it wasn't just buying and holding. If you really wanted to make money, you had to learn how to profit off the swings of the market. And I immersed myself in this for the last 4 years. I created this community where traders can actually connect and take advice and mimic what real profitable traders do. So we in my server, we actually teach people how to trade. So today I'm going to be presenting to you guys the psychology of institutional orders and how to trade 5 lesser known chart patterns. But before we get into it, I just want to make a reminder that this is not financial advice. If you are going to trade, you need to learn how to manage your risk, because not everyone has the same results as everyone else. Most of trading is down to psychology and risk management.
Thanks, Dario. We're really happy to have you on here tonight. At the end of tonight, we certainly hope that the attendees will walk away with a good understanding of crypto trading and some useful tips of how to make it profitable and easy for you. Again, reminding you what Dario stated, it's not financial advice. It is some education around trading crypto. Before we get started though, just let you know some housekeeping. Throughout the evening, feel free to comment, use the comment function in the button on your screen. Some of you I can see have started talking in the chat. Type any questions in there you have any time. We'll run through them during the discussion session. There's a couple of people in there that may be able to help you out throughout the session. Most of all, have fun, and don't forget to stick around during the break. And at the end, we've got some giveaways. Some giveaways during the break and a speed quiz. So, without any further ado, take it away, Dario.
Okay, guys. I'm not sure what's happened to my camera, guys. I've just tried to fix it, but it doesn't seem to be working at the moment. So we'll just get into it. I'll try show my face at the end. Sorry about that. So welcome to the Binance and Crypto Collective Masterclass. I'm your presenter, Dario Angelo. Some people know me as Dars or Worth the Risk. I'm the founder of the Crypto Collective. And tonight I'm going to be teaching you about the psychology of institutional orders and trading chart patterns. So tonight I'm going to go through the different methodology and techniques that I actually use to trade and make money. And this is a whole bunch of different stuff I've learned over the 4 years. Some of it I've got my own kind of perspective and twist on. And I use all these different tools I'm going to teach you. I use them in combination to actually find areas on the chart that have a higher probability of heading in a certain direction. So the first important thing I'm going to teach you guys is that, you know, if you're a massive trader, or you're a bank, you're a hedge fund, an investment firm, and you wanted to buy, 10 million, 20 million, 50 million, or however much amount of Bitcoin, you can't just actually go, you can if you wanted to, but, if you tried to market buy that, or if you tried to limit buy that, before the order would get filled, the market would start to react, the price would start to move, and there would be massive slippage on your order. So these massive traders and these massive institutions, they have to actually find areas where they can generate liquidity to fill their orders. So one way they actually do that is by tricking traders and triggering stop losses. So I've created some slides in the presentation for you guys. You might want to take some notes. If you miss any of it, it's all going to be recorded. And there's also going to be a PDF that's downloadable at the end of the presentation. It's got some extra educational information in there for you guys. So in the first example here, what are the signs of potential large orders or liquidity? You can kind of see that the price will come up to a horizontal resistance area on the chart. If you don't know what a resistance area is, it's basically an area on a technical analysis chart where the price decreases in value from, and a support area is the opposite, it increases. So the price will come up to a resistance area, and it will break out, which means it pushes through this area. And a lot of traders, they see this, they think that it's going to go higher and higher. So they all start to buy and enter trades, but they don't realize that this is actually it's called a fake out. And they've actually brought into a massive sell order. The sell order fills, and the market quickly reverses in the other direction like a spring and closes back under this horizontal resistance level. So you can see the opposite over here, where the price comes down to a support level and it increases in value. Eventually it breaks through, people sell, they start to panic, and then a massive buy order is filled and the price reverses in the other direction. Some other signs of this are pin bar candles, as I've got over here. If you don't know what a pin bar candle is, it's basically a candle with a large wick. A wick is the thin parts, and the body is the thick colored part. So that thin part basically shows us that before this candlestick actually finished, this is a period of time, say one candlestick might be 1 hour. In this 1 hour, the price managed to rise up to here and then close back down here. So this is a potential sign that there's a lot of stuck or trapped traders. So these types of things you see can be potential signs of orders being filled and potential reversals. So as you can see here, we've got excessive wicks, which is a potential sign of orders being filled before reversal as well. Now, there are a few other ways we can identify these kind of areas, which I'm going to go through with you guys. And one of those is supply and demand clusters and order zones. And the reason we use these is, let me just show you the next image. So these are the types of order zones here. So basically, when the market moves, sometimes we have consolidations. So if I can just pull up a quick example here. So you can see, just as a quick example, on Ethereum, the market's kind of trending down, and we kind of start to move sideways a little bit before continuing down. And these kind of little areas, we want to identify them because they become important areas where the price, it comes back to them and actually has a reaction. So we use these order zones to find these historic areas on the chart. And by using these zones, we're actually trying to trade with the larger size traders, because a lot of big size traders and institutions, they're using order zones, they're using horizontal support and resistance to find the areas that they want to place their orders. So we want to use these zones to give us a higher chance to ride with them instead of trying to trade against them. So we have 5 main types here. We have supply and demand clusters, as you can see here. Don't worry if you're confused. I'm going to explain all of this now on the live chart, guys. So we have supply and demand clusters where we have a kind of rectangle forming and then a massive downtrend, which is the supply zone. And the opposite, a demand zone, where we have a little rectangle forming and then the price increases. Single candle supply and demand are similar, except it's one massive downtrend and you're looking to get the little wick at the top. And the single candle demand zone is the opposite. It's one strong uptrend and you're looking to draw a zone along the base area at the bottom. We also have order blocks, which are tiny little blocks in massive moves in the market, like pauses. And we can also use them as a type of order zone. So we're just going to have a look at the chart here on Ethereum Bitcoin. I'm just going to quickly show you guys how you differentiate and identify the different types of order blocks. So what I'm drawing these, I click up here. I use the rectangle tool, by the way. And as you can see here, we can use the replay tool to see how price has reacted in the past to certain areas. So you can see over here, we had this downwards movement, and there was a large wick here. So that showed there were, first the price actually rose in this area. It increased in value until we got to about this area here that I've marked. And once that happened, the sellers actually came in and we headed down from that zone. So we mark this on our charts and we're going to see how price reacts to it in the future. As you can also see down here, we've got the opposite, which is a single candle demand zone. So it's a large wick and price increased from it. So I'm just going to go back to the last image just to show you guys. So these are single candle supply and demand zones. These ones, I'm moving my mouse around here. So we've drawn our zones. Now we're just going to press play and see how the price reacts to these areas. So you can see that the price, every time at first it breaks through this area, but once it comes back to it, you can see that 3 times in a row, it had a little increase from it. So by using these zones, we're going to find the areas that other traders may be looking to buy and sell. As you can see over here, once we broke through that area and we rejected off it, it actually acts as a place the price can go down from. And it's the same in the opposite. So, you know, this can be flipped into support, or the price can actually go under this one, and then we'll have a rejection here and it'll continue downwards. So there's single candle, which is just the upper thin bits, as you can see. Single candle, demand and supply zones. So the next one we're going to go over are supply clusters and demand clusters. So as you can see here, so we have I'm going to show you guys again. So these are supply and demand clusters. They're the little rectangular blocks. So as you can see over here, we kind of have a rectangular area, and then the price begins to head downwards from that area. So this is a supply cluster. It's a place where the price actually consolidated. In this point, there was sell orders being filled, and then the sellers outweighed the buyers, and we started to head downwards. So let's see how price reacts to this area when it comes back to it. So you can see once already, as soon as we got up to there, the sellers were already waiting. And then at this point, it looks like it's going to actually get above the area. But as soon as we come back under it again and we have a rejection candle basically just means that it's a candle where it failed to get above the area. As you can see, it's a big red candle here. And this was a sign we were going to head down again from there. So by using these areas, instead of just buying and selling at random points, where we can measure the distance between them, and we can measure how much potential profit we can make. Because when the price moves from one of these zones, it usually heads towards the next one, as you can see here. So if we sell, we can get a potential target down here. So just like that, hey, Mark. So just like that, we're going to measure, just a second, guys. So by using this tool, the short position, if we enter the short position here, we could have put a stop loss. We could have put a stop loss up here. So we could have seen how much we can potentially lose in the trade if it gets back above the zone. And we can also get a target area down here. So that's a supply cluster. And the last one we have is a demand cluster. The last one we have is a demand cluster where it's a small rectangular block where the price actually increases in value from. So as you can see over here, we have this small rectangular block, and the price, it only increases a little bit here. It's not like massive, but we still draw the zones on our chart because time and time again, the price reacts to it. So as you can see over here, second. So as you can see over here, the price started to increase in value. We didn't hold the area. We fell back through it. We had a massive increase here. And the first time we came back to it, we ended up bouncing right off it. Once again, the price comes back to it here. We increase in value again until eventually, as you can see here, the price breaks under it again, and then continues down off it again until it's above it again. And once again over here is the final time it really becomes a supply area and it heads down. So they're the four types of supply and demand zones. As I've shown you here, supply and demand clusters, single candle, supply and demand zones. Now, the last one we're going to cover is called order blocks. Just going to pull that up on the chart. So order blocks are little pauses in the markets. So as you can see over here, we had this massive downwards move. And just out of all these red blocks here, we only had two small green ones. So the idea is that this is the point in the market where it paused and there was a lot of selling orders coming in, and then it continued down. So it continued down, we had a little pause, and then it continued down again. Now you can also see there's a few of these other little zones, like there's one over here. So let's just see how the price reacted to this. So this is still Ethereum on Bitcoin. So as soon as we come up to this upper order block, there started to show, there was some selling that came in. And then every time the price came back up to it, you can see that it just continued to decrease a bit. We came back to this bottom level and we started to increase in value off there, as you can see over here, until we actually broke above this zone. And now this is something really important I'm going to actually teach you guys. When you have these horizontal support and resistance levels, in the next slide, I'm going to teach you something called price action. And price action is the way that these green and red bars react to important areas. So if you have a resistance area, which is this upper area, and the price breaks through, when it comes down to it, it can, and it finds support there, it actually increases in value. It can be referred to as a support and resistance flip. And now this is a form of price action. So the idea is that now that the sellers were all up here, now the buyers have actually, they've won over the sellers, right? They've broken through this area. Now that the price has come back here, there's a high chance that those orders that were selling, they're actually buying now. So we can use that to increase a probability of our trade, and we can enter a long position. As you can see, from there, it just increases in value. Now, technical analysis is not a guarantee of anything, but when there's so many different traders using similar techniques, you want to be able to understand all of these, so you know what are the important areas that all the traders looking at on the chart. You don't want to just buy and sell at random locations, because chances are that the price is not going to reach that level you're looking for. So that's order blocks. As you can see, they're just the little areas just there and there. They can be red or green. The most important thing is that they're a small area in between the massive moves in the market. So they're the 5 types of order zones. There's also one more way to identify these kind of areas, and that's something we have in our Discord. It's called the heat map. Basically, we have a little application in our Discord. You can type in your crypto, and it shows you that where all the areas were that large amounts of orders are and were. So as you can see in these yellow areas, that shows that there was a lot of activity in those areas. And just like I showed you in the order zones, they can act as support and resistance levels. So when I'm trying to trade or drawing technical analysis, just to give you guys another quick example of a chart I have on NEO, on Bitcoin, on Binance, this is what my chart will look like. These areas, they're on my chart at all times. And
Hey everyone, it looks like we've just lost Dario there at the moment. I'm not sure what's happening there. We're just trying to find out where he's gone. I've seen some people in the chat saying where they're from. We've got someone from New South Wales, but they're in Canada at the moment. Dario, you're back. No, you're muted. As I said, I'm in regional Victoria. I'm actually in Geelong myself. Let's see if we can get the sunny Gold Coast. How's everybody finding it so far? Being able to follow along? Antarctica. Excellent. Some positive feedback for Dario when he gets back on there. Yeah, Dario's back with the land of the living. He's in the chat now, so he'll be back on shortly, guys. All right. Should we? What's Dario? You good now? Are you?
yeah, mate.
All right. I'll jump
Sorry,
back on mute and let you.
my connection fell out. I'm not sure what happened there.
Yeah, cut out probably just at the beginning of that Neo chart. We probably didn't hear much of that.
Okay, cool.
All right. I'll mute myself and leave it to you.
Hello, guys. Okay, can everyone see? Sorry about that, guys. My connection fell out there. I'm not sure what happened. So I'll just go from where I was starting. So this is my chart on Neo Bitcoin at the moment. As you can see, at all times, I actually have these supply and demand zones on my chart. And the idea is to not trade unless the price is reacting to them. By doing this, it's going to discipline you to not overtrade. It's also going to give you potential areas to take profit and to place your stop losses. So this, most of my charts, they look quite similar to this. So just to give you guys one more quick example, looking at Bitcoin on Australian dollar. So just recently, you know, we had this massive sell-off on Bitcoin. Now, if you're an Aussie and you're using Binance and you wanted to find the best location to buy, you could have found this little block here. As you can see, this is a tiny demand cluster where the price increased in value from. So if you wanted to potentially buy Bitcoin, you've had like Australian dollars waiting on the side, you can actually deposit with Binance instantly. You could have had your Australian dollars waiting. You could have placed that order here and you could wait. You can wait till the price comes back to these areas to buy instead of just buying randomly. Because if you just started trading crypto a week ago and you're like, oh yeah, cool, Bitcoin's 25,000, you brought up here and bang, you know, if you wait for the price to come to these areas, you're going to increase your chances of success. So that's covering the supply and demand zones, guys. Now, the next thing I'm going to cover, this is a very important thing to me, and it's probably one thing I think a lot of beginners don't understand. It's called price action, and basically, price action is the way these green and red little sticks, they kind of react to important areas on the chart. So basically on this image I created for you guys, I've gone over the different types of price action I actually look for when entering a trade. And usually when you see these kinds of things happen, they shake out a lot of traders. They put people in a bit of fear. You know, they get a bit worried about their trade. But if you can identify them, you can use them to your advantage to zoom in and find entry points. So the first one is the SFP, swing failure pattern. So as I showed you, the zones there are a form of horizontal support and resistance, and an SFP is when the price closes above this area and it instantly comes back and then reverses the other direction. So it's kind of like people expect the price to continue up from this area. They have orders waiting, it breaks through, they buy, they just filled a massive sell order and in the other direction it goes. So if we can identify these, they are a potential entry. The next one is a support and resistance flip. I did explain that to you before with the zones, how the price breaks through and then it kind of bounces off the zone. Over here, we have the opposite where it breaks under and it rejects off the previous support. Support and resistance flips, they also happen on chart patterns. If you don't know what chart patterns are, you know, they're like the triangles, the wedges, head and shoulders, all that kind of stuff. The price breaks out of the pattern and it instantly comes back. In this point, all the people who brought late, they usually get punished. Their stop losses get hit and then it continues up in the direction they wanted. Here's another example here. The price breaks under, we come back up to it, we reject off it and then come down. So that's support and resistance flips. And the last two, we have pattern failure. Pattern failure is when a chart pattern, in these two examples, I've used the head and shoulders. If you don't know what that is, you can check out our education database in the Discord after. It's got all the information about all the chart patterns. Basically, this pattern, it's got two little bumps and the middle one is the largest. the left and right of a similar size. This can happen with any type of pattern. Now, this pattern is meant to head down. So the price breaks out over here. Everyone starts selling. They think it's going to head down. The price instantly comes back inside. And when it bounces off that, it's called pattern failure, and it heads in the opposite direction. So by being able to identify this, we can try and zoom in on the smaller time frames and get really sniper entries on these supply and demand zones. The last thing I'm going to show you for this slide is called throwbacks. And a throwback is basically, it can be also in a support and resistance flips on patterns. So when the price breaks out, it instantly throws back to that main area. As you can see here, we had these two bumps. It broke out over here and it instantly threw back. When it bounces off this zone, it's called a retest, which is a form of support and resistance flip. As you can see here, it's got retest. We also have deeper throwbacks where the price breaks out, and then instead of just throwing back to the actual line, the trend line here, it goes deeper to shake out more traders. So that's price action, and by being able to identify the different types of price action, we can identify more potential opportunities to trade. Okay. So next up, I'm going to show you guys how I use those two things I just showed you in combination with 5 different chart patterns here to actually make trades. Now, I'm going to show you some real examples I've traded with. Some of them are recent, some of them from a while ago. But what's unique about this presentation is that, you know, these 5 patterns, there's a lot of people, okay, so I'll just run over these and we're going to actually be having a bit of a break. So these 5 patterns here, we have the extended V bottom, the bump and run bottom, the bump and run top, the Adam and Eve bottom, and the Adam and Eve top. The extended V bottom is basically when the price makes a sharp V shape. A V shape is a sign of strong reversal momentum, and it then starts to zigzag between a rectangular looking area before heading upwards again. The bump and run bottom is when the price has a little bump and then a massive sell-off, sometimes up to 30% of the value lost. And then the price quickly reverses and breaks through this diagonal trend line, showing a potential strong reversal sign. It has a throwback here, which is a form of price action I just explained to you. And then the value increases from there. The bump and run top is the exact opposite of that pattern. And it's Bitcoin at $20,000 was a bump and run top, to give you an example. The last two are the Adam and Eve bottom and the Adam and Eve top. And the Adam and Eve bottom and top are consolidation patterns. The price starts to squeeze between these two areas. One looks like a V and one looks like it's got a rounded shape. Eventually, it squeezes between the two areas until we see a breakout and a reversal upwards, and the opposite for the Adam and Eve top. So after our break and the giveaway, guys, I'm going to run you through each of these patterns. I'm going to show you how I use the supply and demand zones, and I found an entry point on how you could have potentially found an entry point on each pattern, and how I measured the potential targets of these patterns. All right, guys.
All right, great. Thanks, Dario. We'll let you have a break as well. I hope everybody's still keeping up after the little technical glitch we've had and enjoying what we've got so far. So I've seen some really good questions coming through in the Q&A. I think some of those might get answered later on in Dario's slides, but there'll be some saved for Dario at the end. And I've seen on the Telegram chat that there's been some of the slides have been placed in the Binance Australia Telegram chat as well for you guys to have a look at in your own time based on what you've learned so far. So I'll hand over to Hannah now to do a speed quiz.
Thanks, Damien. Hey guys, yeah, so I'll just start sharing my screen. There we go. Can everyone see my screen?
Yep.
Yep, awesome. Okay, so how this will work is the fastest one to answer in the chat will win a Binance t-shirt. So I have Vicky and Jose helping me out with this. They'll take a look at who will answer first. And yeah, that's pretty much it. Are you guys ready? Okay, so first question. Name 2 price actions. Yeah. And then next question will be, what is the meaning of price actions? Some of these questions are a little tricky, but I'm pretty certain one of you get them right. All right. So next question. We're just going to speed through this because it's a speed quiz, but yeah. So question 3, name 2 types of order zones. Hope someone's getting this right. 4th question. You guys ready? List one sign of a large order or equity. Oh. And our final question will be, true or false? Order zones help to reduce risk and increases the probability of potential trades. Yep, okay. Hope we've got all those answers in. We'll check them out and then we will announce the 5 winners in the Telegram chat. Awesome. I'll stop sharing my screen and we'll bring it back to Dario.
All right, guys. Okay, guys, good to be back. Seconds. Okay, so they are the 5 lesser known chart patterns there that I described to you. Just to run over them briefly again, we've got the extended V bottom, the bump and run bottom, the bump and run top, the Adam and Eve bottom, and the Adam and Eve top. Now, I've got a slide for each of these images, each of these patterns to show you guys. And these slides, I've taken the images from real charts. I spent time and I found good examples on the real charts. And I used to study graphic design, so I made them into real images. So what you're going to see is that the patterns should look quite similar to these images. That you should be able to identify them. If you have trouble identifying them, this image here, 5 lesser known patterns, I've written all the identification tips here, and then each singular image is going to have the kind of trading information about each pattern. So this is the first pattern. This is the first pattern. It's called the extended V bottom. I'll just get the chart ready while that's loading. So this all right, here we go. So this is an extended V bottom that I spotted quite a while ago. Now, this one was called in my Discord. It was playing across the whole market at the time. So I just called it in general. I said that the market is likely to reverse here because the pattern was appearing. It was on Bitcoin, on Ethereum, it was on all altcoins. So I'm going to show you guys on this example how you could have potentially traded this. So we're going to go back to here. And we're also going to note that over here we kind of have like an important area we can see that the price actually started to reverse from this area. So now that the pattern is actually forming on this zone, it's going to give us an increased chance that it's going to head up from here. So the key to identifying an extended V bottom is that it should have a V. It should look like a direct V. The lines should actually be very hard to match against the side of each line. That's how sharp it should be going upwards. It can appear with the rectangular shape on the left side, or it can appear on the right side. So the idea is we're going to measure the heights of this pattern from the top to the bottom, and we're going to add it to the breakout level. And we're going to enter the trade with a stop loss underneath this zone. If we're on leverage trading or futures trading, obviously our stop loss is going to be higher. But the idea is to use this to at least get a gauge of how potentially far we can put our stop loss. If you're on a normal trade, you might be able to put it below the zone, which is ideal. You know, if you're not on a normal trade, then you want to put it underneath like the 0.382 Fibonacci. If you don't know what that is, the Fibonacci tool, fib retracement, you draw it from the top of a swing to the bottom, and it gives you these, they're kind of like mathematical levels that traders actually look to buy and sell at. So we would have entered the trade here. We could have put our stop loss underneath the 0.382 Fibonacci with a target up here, which, as you can see, we've used the price measurement tool. You can click here. You can use price range to measure. This is the exact height. It's going to unlock it. This is the exact height of the pattern. We're going to add it to this area here just to see how far it can possibly go. And we're going to see how this particular extended V bottom played out. So let me just pause for a second. So I showed you guys the types of price action. Now this is a throwback. As soon as we broke out, we increased. Instant throwback. At this point, a lot of people start to sell in fear. When they're selling, they're filling a buy order. So this is another potential entry. You can buy again here. It increases in value from there. Sometimes it doesn't hit target straight away. It doesn't always hit target. Sometimes the pattern is just going to fail. You can't be right 100% of the time. So this is why we see, even on this example, we didn't get to the target, but you can see how it played out. So this is the extended V bottom. My internet is not being my friend today. I don't know what's going on. I think it's because I'm in the spare room. So this is the extended V bottom here. This is a live example from a real chart. You can see we've got the sharp V, we've got the rectangular shape, and then we've got the Fibonacci levels. We've got the potential buy areas and the support and resistance flips before we reach the target. This pattern has a decent success rate. So next up, we're going to go into the bump and run bottom. As you can see here, the bump and run bottom, it has this tiny kind of little area here. It almost looks a little bit circular. That's called the bump. And then we have this next price movement. It's a massive drop, 20, 30% in value sometimes. A lot of people get liquidated. A lot of people panicking. People are saying, oh, we're going to zero. You're going to see all these kind of emotions running in the market. And then it's going to slowly grind up. Sometimes it throws back again down here. Then it's going to break this diagonal trend line, which is on a very sharp angle. We have a throwback, usually, not always, and then it increases in value to the target area. So that is the bump and run bottom. So I'm going to show you a real trade I did now. This is probably one of the best calls I made myself. I'm not going to say every single thing I chart is this accurate, but it was a very good call. So this is Bitcoin. I think this was in September. So as you can see here, it's going to go back here. So I don't know if you guys know what it is, but I showed it before. Head and shoulders. It's this kind of pattern. So it has a left and right shoulder, which are of equal height, and one large kind of triangle in the middle. And that is a signal that the market is going to go down. So as you can see here on Bitcoin, we actually had this head and shoulders, and we had this massive drop from 11,400 to 10,000. Now, I can remember this day very clearly. At this point in time, there was so many traders on Facebook, in my group, on the internet, and basically they were all panicking. I saw people saying, we're going to 6,000, going to 3,000, you know, they're throwing out all these numbers. And I just knew that, you know, it wasn't likely we're going to head down, because there was so much people that were expecting it to. The more people that expect something to happen, the less likely it's going to happen. So anyway, as I showed you before, we had the single candle supply zones. I noticed over here, just on this little area. Now, so you've got to have a good eye for this stuff here. The most important thing when identifying these important areas on the chart is, you know, what happened from that area. You know, from right here, you can see from this moment, we just barreled down. We absolutely, you know, it just kept falling and falling and falling. So the idea is that there was a big order here that drove this market down. So we're kind of trying to predict that when the price comes back to this area, it's going to have a reaction. So as you can see here on the 3rd of September, you know, we're just resting on this area. I went long on Bitcoin. I was in US dollars at the time because of the head and shoulders. I put all my money back in Bitcoin. So I'm going to show you the trade idea. I posted this live on TradingView. I also posted it in my Discord server. We have a private area where I post the kind of trades I'm doing. Now, this isn't the exact same chart. It's another demand supply zone just on the left here, but it's the same level as you can see. So you can see the head and shoulders up here, and we have the bounce on this area. So I just made this chart and I said, you know, watch this area. It's a very important area. As you can see, the price reacts to it. We could have a reaction. And then on the next chart here, it's actually the same area here. We bounced off it and we come right back down to it. And at this point, I could see that it looks like a bar bottom pattern. As you can see, it's got the circular bump. It's got this kind of hook-shaped movements. As you can see, wait, I'm just going to press play. So as you can see right here, the chart I just showed you. So on TradingView, you can't actually edit this chart. Once you post, this is from this September the 22nd. So I can't change this in any way at all. So we can see the bump and the run, which is here. And we're going to get our potential targets up here, and we can enter the trade here with our stop loss underneath here. So let's just see. Also, just a note, guys, you can see over here we have a demand cluster, which is what I showed you before. Now the price is resting right in it. Let's press play and see what happens. That is the bar bottom, guys. It's one of the strongest patterns you will ever use. And after this video, take some time look through the charts and look at this pattern, and you'll be surprised how often you'll see it. There's another one right here. So as you can see, it looks very much like the image I showed you guys before. Don't worry if you missed it. There's a PDF to download, and it's got a few extra images in there for you guys. So we got the bump, and then we got the massive drop, the run. We break out, and we head upwards. Okay, so that's the bump and run bottom. So next, wait, so actually, so this is the idea. I posted the trade I posted on the 22nd. As you can see, it followed my plan almost perfectly. So now I'm going to show you guys another actual trade call I made, another pattern. It's called the bar top. The bump and run top, it's the exact opposite of the bump and run bottom. And we're going to use Bitcoin again as an example. It's going to clear my chart. All right. Now, back in 2017, when I first started investing in Bitcoin, as well as many other people, you know, they entered into this crazy market where the price went up to 20,000. And, you know, a lot of people, they don't know trading when they start. And I wish I knew this pattern back then, because it would have saved me a lot of stress. So as you can see here, this is Bitcoin in 2017 when it ran to 20,000. Let's go back to the image just for reference. Now, this is not Bitcoin. This is a different chart, just to show you that the pattern should look like the image. You've got the bump here. You've got the massive run upwards. It's on a really weird angle. And then the price just dumps off crazy. As soon as the price enters underneath this trend line, it's a breakout of the bump and run top. And we don't want to enter here because it usually comes back upwards before heading down. And then we have the target areas. Just to mention as well, the bump and run top and bump and run bottom, they both have very high success rates. So looking at Bitcoin, if you come back to here, you can see that at this point, we actually broke out of the bump and run top. Now, at this point, we want to start paying attention and saying, you know, we can potentially find a short here. You know, not everyone, this isn't a pattern you're going to try and pick early. It's chances are when you see the pattern or you identify it, it's already nearly playing out. So as I showed you before, single candle demand zones, we've got two over here that we've marked on our chart. And we also have a kind of little demand or supply zone here, which I've marked as well. So the idea on shorting a bump and run top is to wait to the price to come back up to this trend line. And then we're going to look to open a short on the rejection, which is a support and resistance flip, which is a form of price action that I actually showed you guys before. So this is our potential trade. What I usually do is, this is why I like to use Binance, because I use different accounts. I'll have a futures trade where I'm in and out really quickly for quick profit. I'll have a margin 3 times trade where I'll kind of let it run over a longer time period, and then I have spot trades. So depending on how risky I think the trade is, I can use a different type of trade. So the idea is we're going to wait for Bitcoin. We would have waited for Bitcoin to come back up to this area. And if the price fails to get above it, it's a potential sign that the bump and run top is going to play out. So as you can see here, at this point here, I would have entered a trade. I would have entered a short trade because, as I explained to you guys in the first slide, You know, we want to look for potential signs of liquidity and reversal. Now, here you can see this wick here. This is a potential sign that a lot of traders, they tried to buy up here and now they're trapped. We also have a massive red candle that's breaking underneath this white bump and run top trend line. That's also off a supply cluster. This is going to give us an increased chance for it to play out. We don't want to put our stop loss too close because we can just get knocked out of the trade. So we want to put it, you know, just before, not the last high, but maybe the one before. And as you can see, even though our stop loss is very wide, our potential win is going to be much greater than our loss. So if we pick only trades that have a high potential win and a smaller potential loss, we're going to have more chances of success. So press play and let's see what happens on Bitcoin. You know, I think this bump and run top, it took 1 year to play out. I didn't trade this one. This one is just an example for you guys because for me, it's the best example to show what happened with Bitcoin at its $20,000 top. So at this point, you know, we hit the target. I showed you guys the price action before. At this point here is the support and resistance flip. So by being able to identify this, we can potentially cash in on this trade. Now, I'm going to show you guys just two quick examples. This is another call I made. This is on Link USD. Now, I entered short up here on the support and resistance flip, and I took profit down here before it reversed. Now, someone asked me before, can you show me a trade that you've actually failed? Now, just 2 days ago, or even yesterday, sorry, I actually failed a trade on Link. I'm going to pull it up for you just quickly. On Binance. So I showed you guys before we have pattern failure, which is when a pattern actually breaks out and it heads back, it comes back inside the pattern and it traps all the traders. Just going to clear my screen. It traps all the traders and is a potential buy. Well, I was hoping for this kind of setup here on Chainlink. You know, we had this kind of head and shoulders structure here. Now, I showed you guys the head and shoulders pattern before. It's a potential sign that the price is going to head down. Well, what happened to me is I actually saw the price come back inside this area here, as you can see there. And I assumed it was going to head upwards. We're also bouncing off this kind of zone that was drawn from here. So I entered a buy trade. My idea was for it to head up from here. And we had a massive dump on Bitcoin. And it turned out it was actually a bearish support and resistance flip. And we headed down. I got my stop loss was like down here or something. It was just a normal trade, no margin. I closed the trade with, I think it was like a 10% loss or something like that. So that's just one example of trying to trade price action and failing. If I can show you one example of a bar bottom that played out recently. This is in my Discord server. So I said here on Neo, there was a bump and run bottom playing out, Neo bar bottom breaking out here. I also called it earlier using some other charts. Just a second, guys. I post a lot of trades, you know. So there's the setup that failed on Link. As you can see, I said it's looking to fail the head and shoulders. I was wrong. So this is why you manage your risk. You don't put too much on every trade because you can't be right every single time, guys. So I showed you the bar bottom on Neo. This was the result of the bar bottom. As you can see, it increased from almost 950 to 11,000 Satoshis. This was the original call from here, this red bar down the bottom. And you can see the red bar there, it just shot up from there. And this was my result. I ended up making $5,000 off that. Now, I'm not going to say every single trade is like that, but by learning this, when you start to get really good and experienced, it just becomes natural that you can identify these kind of important areas. And that's what trading is. You want to get in and out between the different areas. You don't want to just, you know, if you buy and hold, if you brought it at back at 20,000 in 2017, you've missed heaps of opportunity. You want to get in and out and make as much as you can. So the next, the last two patterns I'm actually going to go over for you guys are the Adam and Eve bottom and the Adam and Eve top. So this is the Adam and Eve bottom. It doesn't have a high, the Adam and Eve patterns don't have as much as a high success rate as the other patterns I showed you, but they work very well, especially when you use them with the supply and demand zones. So as you can see here, we've got a downtrend. We have a V, like the extended V bottom, we have a sharp V, and then we have a kind of rounded structure. The rounded structure should be very messy. It should be hard to, it should be hard to look, it shouldn't look like anything. It should just have a little bit of a curve on the bottom. The price bounces between these two areas until we see a breakout above, or we see the failure of the pattern. Okay, so Adam and Eve bottom. Now we're going to go back to Ethereum. Now I'm going to show you one successful Adam and Eve bottom I traded, and one Adam and Eve top where I was actually wrong and it went the other direction. You know, we've got to be realistic here, guys. There's no trader out there that's right every single time. Anyone who shows you something like that is probably trying to deceive you. So all traders have losses. What separates a good trader from a bad trader is the ones that cut their losses short and let their winners run, and they also manage their risk. So if they do have a losing streak, it's not going to wipe out all their money, because everyone has losing streaks from time to time again. No one's a guru. They can pick everything 100% of the time. So here's an Adam and Eve bottom. Now, this is another example I called in Discord. So as you can see, it's not the easiest pattern to actually identify. I've got a lot of experience, so for me, it's quite easy to identify. We've got this V, as you can see over here, and then we've got a small kind of curve coming up. And this just means that between these two areas, there's the potential that buy orders are being filled. So we've got the measurement of our pattern. We've measured the heights using the price range tool. And we're going to add that to the, it's called the neckline, which is the breakout level, and we're going to get a potential target. So we would have entered here with our stop loss underneath this area. As you can see over here, we had a demand cluster, which is a rise in price from this small rectangular block. So let's press play and see how it turned out. So as you can see, we hit the target there, and as soon as we hit that point, we started selling off a bit. And you know, when we do these trades, we're looking to get out at the target and then look for another trade. If you want to try and catch massive moves, then I advise just leaving a little bit, like take 90% profit, so you cover your risk and then let the rest run. So that is an Adam and Eve bottom. And I'll just get that off the screen. And now I'm going to show you guys Adam and Eve top. All right, guys. I've seen some of your questions, by the way. After I finish showing the Adam and Eve top, I'm going to go through the questions and give you guys some answers. So when you are trading, guys, and you do make these kind of mistakes, when you get stuff wrong and you make mistakes, don't just get like, some people just go off, you know, I effed up, and they walk away and they're like, oh, this sucks. Make sure you take a lesson from it. Understand where you went wrong and how you could have improved. Like, this is definitely one. This is one trade I got wrong, and I kind of wish I'd trusted my gut feeling on this one and switched. So I'm going to go through it now using the replay tool. Okay. So this was another call I had in Discord. It was a few weeks ago. Now I called for this Adam and Eve top. I actually entered, as you can see, we've got the sharp V and the kind of rounded structure. It's not very easy to identify. I called for short up here, and you know that the target would have been down here, which is the measurement of the height of the pattern with a stop loss potentially above the pattern. So I was actually short, and at this point, I wasn't at the computer at this current time. So, you know, I kind of saw it break down, and I'm like, all right, you know, it looks like it's going to play out. I went away for a bit, and I came back to this. So it just went the complete opposite direction. Now, this is why we use risk management, guys, because we can't be right every single time. But I want to show you guys how you could have actually still turned this situation in your favor. So I showed you guys before pattern failure, which is when a pattern breaks out in one direction and it actually heads back in the other direction. So at this point here, we can see the large wick, the thin part of the candle. It's very large. This is a potential sign that we're wrong and it's going to go in the other direction. So once it comes back inside, it kind of bounces. As soon as we get this massive thrust off that area, it's over. There's so much bias here off this demand area here that the pattern is going to fail. As you can see, it comes back to this outside line. And at this point, it kind of bounces off it right here. If you're short on this, this is pattern failure. At this point, you're going to switch the trade and you're going to enter the opposite direction because there's so many buyers, it's likely to head up. And then you're going to take that measurement and you're going to actually add it to the top. As you can see, it hit that exact target. So I just wanted to show you guys as an example of if you understand all these different patterns, you can identify these small opportunities to actually trade off. So that was the Adam and Eve. That was the Adam and Eve bottom and the Adam and Eve top. Now I've got a few questions from you guys. I'm just going to go through now. Let me just open up the chat.
Yeah, great, Dario. While you do that, just really informative session. Thanks for all that tonight. I think I've learned something myself. I hope everyone else has learned something as well. Yeah, as you said, you'll get to some questions in a moment. I think there's a couple there for you.
All right. Future of manual trading. Okay. So someone asked, what do I think about the future of manual trading given the acceleration of increasingly sophisticated algorithms and AI? Will there still be opportunities? My answer to that is yes, because there's some things that a human can do that a robot just can't. Humans have gut feelings, they have instinct. Machines don't have instinct. So for that reason, we're always going to have the advantage over robots. And in extreme markets, like what you saw the other day where Bitcoin dropped $2,000 or whatever, robots don't work in that market. They actually produce losses usually. So maybe the technology will advance. Obviously, it's going to be harder for traders as it advances, but I don't think it's going to kill the opportunity. I think it's definitely still going to be there. Another question I got was, when I set my trades up, do I set them with a stop loss and a target 1 and 2 and then pretty much walk away, or do I move my stop losses up as it plays out? That's a great question. Now, this is why I use different accounts. I use the Binance. It has spot, margin, and futures. If I want a trade where I'm kind of comfortable to hold it for a longer period of time, I think it's got a high chance of playing out, and I want to leave the targets, I'm probably going to leave it on the spot or the lower margin. And for higher risk trades where I want to make quick profit, I'm definitely going to move my stop losses up. Sometimes I'm just going to get out of the trade as soon as I'm in a bit of profit. I'm using the futures accounts to do those kind of trades. So it's probably one of the most difficult things in trading is to know the difference between when to keep in a trade and when to get out. That comes with years of experience. And, you know, people still are going to get it wrong even after they've been trading for a long time. So that's my recommendation, is use different accounts and have one account where you just want to make your quick profit so you can get that quick percent, and have another account where you want to try and get the maximum profit per trade. Also, just to explain what futures, leverage, and margin is. Margin is basically borrowing off an exchange. So if I'm on 5 times margin, if I have $10,000 of Bitcoin, if I'm on 5 times margin, I'm actually trading with $50,000 of Bitcoin. So a 10% loss on 5 times margin is a 10% of 50,000 Bitcoin is a $5,000 loss. Yeah. So 10% of 50,000 is 5,000. So if I lose 10, if I'm trading on 5 times margin, and the Bitcoin goes down 10%, I'm going to lose $5,000 out of my 10,000, because my 10,000 is times 5. Futures, a futures contract is basically it's agreeing to buy and sell an asset at a speculated future price. So futures contracts are useful because they tend to react first than the traditional markets.
Excellent, Dario. I'm probably conscious of time. There's a couple more questions in terms of that's been asked a few times in terms of the timeframes in 1 day, 1 hour, 30 minutes, 15 minutes. Is there any preference to timeframes?
Of course, there's always going to be a preference to timeframes, guys. And for the order zones, you're always going to put more weight and pay more attention to the zones that are on the 1 week, the 1 month, and the 1 day timeframes. Not to say that the smaller ones don't work. They do work, but you got to think, you know, there's massive traders, they're looking at these 1 month ones. Do you think the chances of having that same reaction to a smaller one is not as likely, you know? So yeah, the 1 day, the 1 week, and the 1 month timeframes, chart patterns can work on all timeframes, but it's the same thing. The ones on the higher timeframes are easier to trade and work better.
Excellent.
I also had another question. Can I elaborate on my trading strategy? Now, this is my trading strategy is something I've developed with my experience over the last 4 years, and it kind of evolves with me. But right now, it's been like this for quite a while. I just use the supply and demand zones. I use the chart patterns, and I use the price action trading. Sometimes I use the RSI and the stochastic to find divergences and just to see if the market's oversold or overbought. I also like to use volume, because when you have chart patterns and there's a lot of volume at the breakout, it actually can give you a increased chance of success.
Excellent, Dario. And I think just the last one before we move on to close out the session tonight. A couple of people have asked on those losing trades, if you're willing to share, of course.
Oh, yep.
How much did you lose on those ones?
Now I'm not trading with too large. My trades are anywhere between on a trade I'm really comfortable with. I'm going to trade around probably $5,000, maximum 10,000, and then that's going to be on margin too. But on that link trade the other day, I probably lost about $1,000, man, maybe 1,200 or something like that.
Okay, well, not excellent, but thanks for answering that and thanks for being open with that. It's good to see both sides of the coin when you can, as you said, people always talk about when they make money, but don't often share the other side. So
just my advice, guys, I wouldn't trust people who only show wins, because every trader has losses.
Good insight there, Dario. We'll say thanks a lot for answering those questions. We'll be announcing the 5 winners to the speed quiz, I believe, in our Telegram chat or in the chat in here. Just confirm that. We'll congratulate the winners in a moment. I saw earlier in the chat we did drop the Binance Telegram Australia link for those that are interested. I see some people are joining, so thank you. Just like to remind everyone that Binance Australia is an Australian regulated crypto exchange. Jeff and the team are located in Brisbane, and it's easy to make Australian deposits in Australian dollars via your Australian bank account via the NPP Pay ID system. You can trade with Australian dollar with the lowest fees and the deepest liquidity. So
put in 2 cents as well. I've been trading for 4 years. Binance is definitely the most reputable exchange to trade on. It's definitely known for the safety of the exchange as well when it comes to being hacked and stuff like that, guys.
Excellent. Well, thank you everyone for joining us in the masterclass. I hope you've learned something. I certainly have from Dario. Very insightful session and showed us some stuff. As he mentioned, that he'll drop in some information in a PDF for you guys to have some more information. Feel free to join him in his Discord channel to watch his trades and ask some questions there. I'm sure that he'll be available to help you out. And yeah, thanks for joining us, and thank you again, Dario, for joining us tonight.
Thanks,
it's been really valuable.
Sorry you couldn't see my face. I'm not quite sure what happened with my camera, but if you guys want to come have a chat in Discord, I'm sure you're going to get to see it another time.
Excellent. Thank you, Dario, and thank you, everybody.
Thanks a lot.